Okej, så där ja. Ska vi ge alla en minut till att komma in här innan vi drar igång. Kör igång 19.50 här nu. Okej, jag tänker att vi börjar köra lite. Tjena allihopa som har kommit in hittills och välkommen till den här onsdagens webinar. En webinar vi kör i princip varje onsdag så ofta jag kan. Där vi kollar på aktier tillsammans, kollar på vad som händer på marknaderna och ni kan ställa frågor öppet och önska på en teknisk analys där vi kollar på lite grafer tillsammans. Idag kommer vi köra lite snack om inflation fram till 20.00, kolla på vad som har hänt idag, kolla på indexen lite och sen väntar vi på räntebeskedet vid 20.00 och vid 20.00 så kommer då räntebeskedet ut från USA, vilket till 99,9% kommer vara oförändrat. För det som Fed har signalerat tidigare har alltid stämt i princip. Och de har signalerat att de kommer inte börja sänka redan nu. Så vi förväntar oss att den kommer bli oförändrad. Skulle det vara något annat, då hade det varit en väldigt stor grej. Men vi förväntar oss att räntan blir oförändrad. Och sedan mellan 20.00 till 20.30 då kommer vi köra Q&A och teknisk analys i en halvtimme. Och sedan hoppar vi in och följer Fed Powells livestream som då drar igång 20.30 som sagt. Så välkomna in så länge. Droppa gärna like på videon som dyker upp i fler flöden. Så ja, hade uppskattat det. Men låt oss börja med. Jag har precis varit sprungit intervall och känner mig lite yr och bastat. Men vi kommer nog in i det strax. Så det vi vill börja med att gå igenom idag, det är ju då inflationsrapporterna som dök in vid 14.30. Vi hade core CPI som då dök in på 0,2%, där väntat var 0,3%, så 0,1% under. Month to month, vi kom in 0,0%, 0,1% under och yearly kom vi in 0,1% under. Och detta här är exakt vad Fed vill se. Det här kunde inte vara någonting bättre för Fed. Att det går neråt med 0,1 basis points, bland det minsta det kan gå ner här med 0,1. Och Fed gillar det här jättemycket. Det här betyder att deras taktik med att höja räntorna, hålla räntorna höga fungerar, för inflationen går neråt. Det betyder även att det kan komma närmare med räntesänkningarna och lätta på den monetära politiken. Så att det här är exakt vad Fed vill säga just nu, att den kryper ner långsamt och försiktigt ner mot sin target på 2%. Så väldigt, väldigt positivt för Fed här. Kunde inte blivit mycket bättre skulle jag säga. Och när vi då fick in räntebeskedet, vad hände med marknaderna? Jo, vi såg ju en väldigt, väldigt stor uppgång. Och detta är ju då Nasdaq-indexet. Vi kan zooma in på 5 minuter candles istället så ser vi det lite bättre. Och sådär ja. Då säger vi fick in 14.30, här fick vi in räntebeskedet, marknaden tog emot det med öppna armar, vi stack 1% direkt och var nu fortsatt att jobba allt mer uppåt mot nya all time highs i Nasdaq. Som sagt, marknaden gillar det jättemycket, jättepositivt för marknaderna generellt. Och det vi kommer kika på idag sen, det är ju då hur Fed pratar om räntesänkningarna i framtiden. Det släpps även en Fed dot chart och det är helt enkelt vad de olika medlemmarna tror att räntan kommer vara i. Så vi kan ge ett exempel på en Fed dot chart, för den här som många kommer tycka är väldigt intressant idag. Om Fed dot chart ser ut någonting likt det här, och det är helt enkelt då vad de olika FOMC Participant Policy Path Chart, så vad de olika medlemmarna tror att vi kommer hamna där varje prick är en medlem. Så hade de ju då varit, det här var ju då från mars 2024, då trodde man att vi skulle Många låg här runt 4,5% för 2024 och sedan deras projection för de kommande åren. Och idag så kommer vi som sagt få en ny sån här. Och det ska bli intressant att se om den har ändrats någonting när man ser att inflationen gått neråt lite grann. Det är i alla fall det här som många kommer kolla på idag. Vi har sett det mycket på nyheterna, lite överallt idag. Dotplot, dotchart, folk kollar på det väldigt mycket. Så det ska bli intressant att se när den kommer ut sen och om Fed-medlemmarna har blivit lite mer optimistiska med att kanske sänka räntan tidigare och snabbare. Så det ska bli väldigt intressant att se. Och ja, Powell kommer förmodligen toucha på det här med CPI typ där. Så vi får se om han kan fortsätta hålla marknaderna uppe eller om han skulle sänka oss. För Powell, han har ju en väldigt stor makt. Det är väldigt ofta vi säger att bara han säger en mening fel som låter lite oroande så kan marknaderna falla väldigt hårt och vice versa. Det är nog den mannen som har mest påverkan på marknaderna av någon. Så det kommer bli väldigt intressant vid 2030 när han drar igång helt enkelt. Så vi ska se. Och som sagt, detta är vad vi väntar oss just nu. Traders widely expect the Federal Reserve to hold interest rates steady at their current range of 5.25 to 5.5%. Så ja, det vi inväntar lite här nu som sagt är då räntebeskedet vid 8-tiden nu om en 4,5 minut. Där vi förväntar oss att den ska vara oförändrad. Så jag tänker att vi väntar in det här innan vi börjar kolla på det tekniska lite mer. Det är lika bra att bara dra ett kik på det här. Så vi ska se. Eller vet ni vad, vi kan starta och hoppa över där med en minut. Vi kan ta den första frågan, Evo. Vi kan kika på lite Evolution Gaming och sedan kan vi då gå in och kolla på lite räntebeskedet. Så låt oss trycka in Evo. Evolution. Har haft det väldigt tufft. Fortsätter falla en hel del just nu. Föll en del idag men återhämtade sig efter ett tag. Men jag tycker väl det här ser ganska bearish ut fortfarande. Det ser ut som den vill fortsatt neråt. Jag har själv kollat på lite köplägen. Här var den nivån som jag kollade på först och främst. Vid Fibonacci 0618. Men det blev inget rätt stöd där. Jag tycker väl inte det här ser jättepositivt ut heller. Nästa nivå som jag skulle vi hålla lite koll på kommer vi vara här nere vid 1060. Där vi har lite tidiga nivåer här nere som kan vara intressant att hålla koll på. Så Evolution, jag har haft det tufft. Gjorde en väldigt fin återhämtning från oktober. Dippar hårt här nu och som sagt jag tycker nog det ser fortsatt bearish ut. Vi ser här att 20 EMA, den orangea linjen, skapar väldigt tuff motstånd. Vi kommer upp här hela tiden och faller neråt. Till och med redan här vid 9 EMA, den orkar inte alls studsa mycket, faller vi neråt. Så väldigt negativt momentum för tillfället. Jag skulle nog förvänta mig att vi kan komma ner mot den här zonen. Det är väl där nästa lite bättre stöd som jag skulle kolla på finns i alla fall. Så den zonen här, det är väl där som jag skulle säga håller lite koll på för framtiden. Paypal har jag känt mig ganska positivt inställd till på medellång sikt. Jag tycker den ser intressant ut. Att den är på väg in ny channel här som ser ganska positiv ut. Vi har brutit den här tidigare negativa trenden. Faller lite de senaste 2 dagarna här nu. 3,5% igår, 2% idag. Jag vet inte om vi fått in någon nyhet i Paypal som sänker oss. Ingenting jag har sett i alla fall. Men jag tycker absolut att Paypal ser intressant ut. Inte på jättekort sikt, för det ser ganska choppigt ut här. Men jag tycker att när vi snackar veckor eller månader främst, så tycker jag att vi håller på att skapa en fin uptrend här som är på G. Vi bygger högre bottnar, vi bygger högre toppar. Vi handlas ovanför moving average. Vi har gått ner lite nu, men vi börjar ändå se att de börjar trenda uppåt. Vilket jag tycker ser overall positivt ut. Så vi får se här om det kan finna stöd vid de här nivåerna. Vi kommer ha en del stöd här vid 63. Sen annars har vi ett gap här vid 61 som kan vara lite intressant också. Men jag tycker den ser lite intressant ut på månaders sikt, att den kan fortsätta återhämta sig upp. Och det är en av de techbolagen som verkligen är väldigt nedtryckta, men som ändå visar ganska fina siffror ändå. Så jag tycker den fortsatt är lite intressant att hålla utkik på, det tycker jag. Räntebesked om 45 sekunder. Jag tänker att vi hoppar över här. Och så ser vi vad det har att erbjuda på. Så som sagt, jag tror, jag kommer inte ihåg hur det var, men väldigt, väldigt många gånger i rad. Så jag tror att nästan aldrig Fed har gått emot den här forecasten. Så vi får se, hade det varit en sänkning, det hade varit väldigt, väldigt galet. Det hade det verkligen varit. Det hade tagit alla med storm och chockat alla. Så vi får se vad som händer här nu om 7 sekunder, countdownen. Men med all största sannolikhet så kommer vi se 5,5% här. Och ja, det är väl det vi inväntar oss här nu alldeles strax. Och där kommer det in 5,5%. Inga konstigheter alls. Inga konstigheter alls. Så 5,5%. Vi kommer förmodligen se lite reaktioner, det gör vi alltid. Lite ändå, även som det som väntat. Ja, vi ser här till exempel lite sell-off. Men köps upp direkt. Vi kommer se mycket, mycket volatilitet mot kvällen här nu. Vi kommer se upp, ner. Så den här kvällen kan erbjuda lite allt möjligt. Så väldigt, väldigt intressant att fortsätta här nu framöver. Det är ju vid 2030 som vi verkligen kommer dra igång på riktigt med Powell. Men nu kör vi tillbaka till Q&A och teknisk analys. Så har ni önskemål på saker vi ska kolla på, eller någon fråga om trading, investering eller någonting, så är det bara att ställa dem. Så går jag igenom dem efterhand. Synkrobi, det är väl ett mindre bolag. Och det här ser ju ganska bearish ut. Det är väl ingenting som jag hade rört alls, utan det ser ut som den bara vill fortsätta neråt. Ja, nej, tyvärr. Det här ser ju väldigt bearish ut. Vi handlar ner vid all time lows. Vi fortsätter trenda neråt. Så det ser fortsatt ganska bearish ut, tycker jag. Så nej, jag har varit ganska negativt inställd här. Visst, det kan studsa upp lite, men det ser ut som den bara vill fortsätta neråt. SMFT, Microsoft, är vi uppe på all time highs. Det är vi skjuter också upp mot nya all time highs här i Nasdaq. Eller i Microsoft, och det här ser ju jättepositivt ut, det gör det. Men är det här nivå där jag skulle hoppa in och köpa på? Nej, det är det nog inte. Skulle vi som ut väldigt långsiktigt, kolla till exempel en monthly chart, så ser vi att vi är väldigt, väldigt, väldigt högt uppe. Vi har haft en väldigt, väldigt fin tid alla de här åren här nu sen 2008. Vi hade covid här. Covid var faktiskt på den här lilla här. Lite nedgångar här, men overall väldigt, väldigt starkt. Brutit upp en ny all time highs. Ser absolut ut som Microsoft vill squeeza på uppåt, tycker jag. Så tycker absolut det ser ut som vi vill squeeza på uppåt här för tillfället. Vi ska se. Vi bryter uppe på de här topparna, så vi har ingen nivå att gå på uppåt, vilket är det jobbiga när vi går upp mot all time highs. Så jag tycker det ser ut som vi vill uppåt, men spontant ingenting som jag hade velat köpa här just nu. Hade jag legat in trade till exempel, att jag hade gått in i den här dippen eller något, ja, men då hade jag absolut kunnat hålla kvar lite, så den går ut. Men jag har svårt att komma in med en bra riskhantering här personligen. Men jag tycker det ser ganska positivt ut ändå. Så det ser ut som vad vi vill fortsätta på uppåt i Microsoft. Om det ser bearish ut, varför inte lägga en short? Om du menar synkro, så kan man inte shorta den typen av små aktier. Så ja. Och sen så vill jag inte shorta allting heller. Så är det. Ditt innehåll hade varit värt att betala för. Fortsätt med det du gör, kolla gärna oljan. Tack så mycket, Vilgot. Vi kan kolla på oljan. Vi bröt upp i channeln igen. Studsade ganska fint i den här, precis i toppen på den här zonen som vi hade pratat om lite tidigare, var bra stöd. Kollade på motstånd vid den här channeln. Vi fick ett första motstånd i första touchen här nu i fredags, men måndag väldigt, väldigt starkt uppåt. Bröt upp i den här channeln, ser jättestarkt ut. Möjligtvis att dippa lite, men det ser ut som oljan bör gå uppåt igen mot den här trenden. Det känns som vi hade en ganska intressant channel här. Vi bröt neråt, testade, bröt rakt in i den igen. Så jag tror nu vi bara kommer börja jobba i den här channeln här igen. I oljan. Vi ska se. Inte alls omöjligt att vi börjar göra någonting i den här stilen. Jobba oss uppåt mot trendtaket här igen mot 84. Vi har en tuff motståndsnivå här. Det ser vi. Den här är väldigt tuff. Här uppe vid 80. Ska vi säga 84,5. Strax under 85. Runt 84,5. Vi har väldigt, väldigt många toppar här. Vi har flera moving average som möter upp här. 200 dagars strax under. 50 dagars här uppe. Så väldigt, väldigt tuff motståndsnivå där. Så kan absolut squeeza på upp mot den här zonen. Det är absolut möjligt. Den här, sedan där hade jag nog sagt att här kan det bli jävligt tufft. Här finns mycket motstånd som är värt att hålla utkik på. Så det vill jag ska ha koll på oljan nu. Så som vi kommer fortsätta den här channeln. Skulle vi squeeze upp till den här zonen vid 84,5 kan absolut bli lite intressant. Hålla koll på ett short trades där kommer jag nu göra faktiskt. Hålla koll på i alla fall. Att om den kan komma upp hit. Så kan det vara värt att hålla koll på den korta lite. Men här just nu reclaimat den tidigare channeln. Så ut som vi vill jobba oss uppåt mot taket här igen. En perfekt short hade ju egentligen varit här borta. Trendtak och de här nivåerna här. Så vi får se om det kan nås. Det hade absolut varit den mest intressanta nivån. Ericsson. Ska vi se. Bröt ovanför den här nivån. Där motståndet vi kollat på tidigare. Studsar ner här nu under. Och så väldigt bra ut när den bröt den här nivån. Nu retestar vi runt de här tidiga topparna som stöd. Väldigt viktigt att den kan komma ovanför de här igen. 20 med brukar vara en ganska bra nivå när vi väl bryter på uppåt. Så absolut en intressant nivå att hålla koll på här nu för stöd. Men för fortsatt resa så vill vi ju se att vi kommer upp snabbt ovanför de här motstånden igen och börjar handlas här uppe. Vill vi gärna se. Kan det komma upp någonting i den här stilen, då bör det se väldigt positivt ut att vi kan squeeza på högre. Men är det mer nu så att vi går lite sidled här nu, vi kommer inte riktigt uppåt, vi faller ner lite, då kan det absolut bli att vi ska ner mot de här 61 nivåerna och liknande igen. Så intressant stöd här nu. Kan vi komma upp här lite igen, handlas upp mot 65, ta oss ovanför de här topparna här, då tycker jag absolut det bör se ut som en hälsosam dipp innan jag fortsätter uppåt. Men går vi här i sidled så kommer vi nog bryta neråt. Så det är väl lite så som jag har tänkt på Ericsson här nu. Just nu kan det vara ganska svårt att säga exakt, så det skulle nog vara ganska neutral här nu tills vi ser någon form av mer bekräftelse i trenden. Men det ser ganska fint ut annars. Så vi får se om det fortsätter. Finns bara över 20 i maj, så kan det börja stabilisera sig. Kan vi absolut börja squeeza på. Så vi får se om det fortsätter nu de kommande dagarna. Kan man hitta en stigande channel? Absolut, har man kunnat göra det i Ericsson. Det är väl mest bara att dra någonting i den här stilen här. Om man vill ha en stigande channel så har vi någonting i den här stilen. Så det är också något som man kan hålla koll på Ericsson. Att dippar vi under den här så kan det ju absolut bli väldigt shum. Så stigande channel just nu, så det lutar ju mer positivt än negativt. Men som sagt, skulle vi bryta under här kan det vara dags för lite dippa neråt. Hexagon. Det var ett tag sedan jag kollade på Hexagon. Och resetta. Börjar se ganska positivt ut med dagens candle, tycker jag ändå. Vi kan se att vi har haft en ganska tydlig channel likt någonting i den här stilen. Ska se om vi kan tuna den lite. Jag har nog velat lägga den lite annorlunda. Det är mest taket här som jag tyckte var lite intressant. Bottnarna här är inte riktigt lika bra. Någonting i den stilen hade nog varit mest optimal. Men jag tycker absolut det kan vara intressant att ha koll på Hexagon här nu i dagarna. Har en stark dag idag på 3,5%. Ser ut som den vill försöka bryta sig ovanför taket här. Så ja, men jag tycker vi absolut det kan vara intressant att hålla ett utkik på i Hexagon. Vi kommer ha en del motstånd här. Och den här nivån, det är väl de två jag skulle ha koll på som motstånd. Men bryter vi över 122 tycker jag absolut det ser ut som att den gör sig redo för att bryta på allt mer uppåt. Potentiellt kan vara upp mot 128. Där var nästa kanske större motståndsnivå som kan vara att hålla koll på. Kanske redan vid redan här vid 127 skulle jag nog säga. Är väl första starkare. Så lite nivåer här, bryter vi över där. Ser absolut bra ut. Vi har inte riktigt lyckats bryta över än. Men ett till candle som stänger utanför här. Så börjar det absolut se allt mer positivt ut. Alibaba. Jag tycker ändå att detta ser ganska intressant ut, Alibaba. Det gör jag. Se om vi tar FIB-nivån här. Hur ser det ut om vi line upp den från den här botten? Nej, jag gillar den här. Jag tycker att Alibaba ser ganska intressant ut. Det gör jag. Jag hade egentligen gärna sett att vi gick ner till 76 först. Men jag tycker det börjar se ganska bra ut. Vi gått på starkt uppåt, dippar neråt nu, går lite i sidled. Kan vi bryta oss ovanför 20 i maj, den orangea linjen, och den här trendlinjen här, så tycker jag absolut det ser ut som att Alibaba vill fullstända uppåt igen. Så det är väl det som jag hade velat hålla lite utkik på Alibaba. Det finns fortfarande möjlighet att vi kan gå ner här mot 76. Jag känner mig inte starkt positiv än. Men kan vi bryta trendlinjen här, kan vi bryta ovanför moving averagen här, så tycker jag absolut det ser starkt ut att vi vill börja återhämta oss. Så Alibaba ser fortsatt ganska intressant ut. Så möjligtvis 76 kan vara möjligt, men hålla koll på om det kan bryta över här. Så ser det ganska intressant ut i mina ögon. Kakao. Jag har aldrig tradat kakao själv. Vad kan det ha för ticker? Kakao. Jag vet faktiskt inte vad tickern är för detta här. Jag har aldrig tradat kakao själv. Kakao. Stavar till och med fel. Snyggt. Kakao futures. Ja, vad kan vi säga om den här grafen? Alltså det har ju gått väldigt, väldigt starkt det senaste året. Priset på choklad har gått upp 5x sen oktober 2022. Så det är ganska sjukt. Jag tror vi pratade om det för någon vecka sedan, när den bröt över den här trendlinjen här. Om det var någon annan här som tradar kakao som hade med koll. Jag får med vi pratade om det för någon vecka sedan. När vi bröt över den här trendlinjen så såg det ganska positivt ut för att squeeza på uppåt. Och det gör det väl nu också. Det ser ut som att vi vill upp och testa tidigare all time highs i kakao. Sen är jag inte jätteinsatt i hur kakao brukar gilla att röra sig, för alla har handlat där själv. Men rent tekniskt sett så vi hade toppa här nu som var väldigt tufft. Vi bröt ovanför de topparna här nu. Väldigt starkt, 6,7% idag. Och det ser starkt ut. Det ser ut som vi vill squeeza på uppåt mot de här tidiga topparna. Så men jag tycker det ser ganska starkt ut i Kauko. Det här är ju nästan motstånd som kvar värt att hålla utkik på. Silver. Låt oss ta ett kik på silver. Silver och guld reagerar lite positivt på siffrorna idag. Vilket var lite blandade känslor. Väl generellt sett när inflationen går neråt så brukar det inte vara jättebra för råvaror. Men nu tog dollarn och liknande stryk, så råvarorna upp. Vi får se om det håller i sig. Jag tror också det kommer påverkas ganska mycket med Fed ikväll, vad de pratar om räntan. Men silver här, alltså jag vet inte vad jag tycker alltså. Kan vi rita upp en bra channel här? Jo, det kan. Den här ser ändå ganska fin ut. Det gör den. Alltså den här channeln i sig ser ju väldigt bra ut, måste jag ändå säga. Nu när jag ritar upp den. Det är som jag skulle säga. Det är att om vi bryter den här på nedsidan. Alltså att vi bryter igenom den här nedre delen. Då tror jag att vi har en väldigt, väldigt bra chans att flyga ända ner här mot 27,3 i alla fall. Det är vad jag skulle säga mot nedsidan. På uppsidan. Så vi ser att det blir lite tufft här nu. Vi försöker bryta uppåt. Vi klarar inte riktigt av det. Vi ser att 20 i maj skapar motstånd här just nu. Så skulle vi kunna bryta ovanför de här topparna här igen. Att vi kommer ovanför de här moving average. Då tycker jag det börjar se ganska positivt ut igen. Då hade jag nog velat kolla någonstans här. Alltså jag tycker silver är ett svårt läge här. Det känns lite mitt emellan nivåer. Jag väntar på antingen ett stort utbrott neråt eller uppåt. Jag hade haft koll på den här trendlinjen här. Bryter vi den uppåt. Ja, men då tror jag att vi tuffar på och testar de här topparna upp här igen. Skulle vi bryta på nedsidan, ja då ska vi nog ner mot 27,3. Så det är väl lite så här som jag har kollat på i silver just nu. Här hade det varit lite i vänteläge i något form av utbrott åt något av hållen. LVMH kommer vi prata om den förra veckan. Jag tror inte den kommer ner till de nivåerna. Vi ska se här. Nej, jag känner mig väl fortfarande ganska negativt inställd här. Vi pratar om att absolut ingen studsar lite här vid 0,618 Fibonacci-nivå. Men nivån som jag tycker ser mest intressant ut för köpa i LVMH kommer vara här nere runt, ja men strax under 700. 690-700. Det är väl den nivån där jag tycker det kan börja bli lite intressant att köpa rent tekniskt. Den nivån som jag skulle hålla koll på i alla fall. Så jag tycker fortfarande det ser ganska negativt ut. Känns som vi ska fortsätta trenda neråt. Men vid den här nivån här, där gillar jag absolut. Den nivån gillar jag att kolla på köplägen. Så det kommer jag själv göra. Shopify har tagit mycket stryk vet jag. Men gjort en fin återhämtning. Jag har faktiskt inte sett den nu på någon vecka. Men väldigt fin återhämtning de senaste 2 veckorna. Hur mycket vi återhämtade oss. Från låsen här, nu är vi uppe nästan 20%. Men det ser väl ganska starkt ut i Shopify. Tycker jag. Just nu. Vi ska se här. Ska ändra den lite, någonting i den stilen. Så. Vi har lite motstånd här nu vid 50 dagars moving average. Så det är inte alls omöjligt att vi kan se lite dippar från de här nivåerna nu. Men jag tycker att det börjar se ganska bra ut. Jag skulle absolut säga att håll koll på att vi kan jobba oss uppåt. Vi har ett stort gap här uppe vid 75. Så man kan hålla koll på. Skulle den komma upp där så är det en väldigt tuff motstånd. väldigt tufft motstånd. Så ja, men jag tycker väl det ser ganska bra ut Shopify. Vi gör en ganska bra återhämtning här nu. Det känns möjligtvis som det kan börja bottna ut lite. Kan det komma ner här, finnas stöd runt 62 till 63. Det är väl någonstans här som jag tycker det ser lite intressant ut för ett dippläge. Men kom den ner hit här, visar lite styrka, så tror jag absolut den gör sig redo för ett nytt push uppåt mot de här 70 nivåerna. Så absolut intressant att kolla på Shopify lite. Tesla har varit lite mer smygande, men gillar inflationssiffrorna idag, säger vi, upp 5%. Och jag har varit ganska passiv i Tesla. Jag pratade om att köpläge vid 148 som jag gillade, och här de senaste veckorna så har jag varit helt neutral. Tesla i väntan på något form av utbrott neråt eller uppåt. Den här trendlinjen vi kollar på uppåt här nu som blir väldigt intressant. Det ser faktiskt ut som att den vill bryta den, men vi har inte gjort det än. Men 5% upp idag. Det känns som vi kommer utmana taket här uppe nu de närmaste dagarna. Vi är på väg upp dit just nu. Kan vi bryta den här trendlinjen här, då ser det väldigt starkt ut att vi vill squeeza på upp mot 198 till 200. Taket på channeln här, potentiellt ända upp mot 207. Så väldigt intressant trendlinje här nu som jag tycker man kan bevaka. Den här bryter vi över där väldigt starkt. Skulle vi bryta den på nedsidan här 170, ska vi nu ända ner här mot 158 igen. Men det ser ut som den vill ge sig an här uppe nu, så vi får se. Kan vi stänga ovanför den, så ser det ganska bra ut. Adidas, det var länge sedan jag kollade på Adidas scarf, det ska jag vara ärlig. Är detta rätt Adidas-aktie? Det borde vara det, tycker jag. Eller den här, okej, det är samma. Adidas, okej. Vi har all time highs här uppe vid 340, så en bra bit därifrån. Får vi något intressant när vi gör det här? Lite intressant nivå, inte jätteintressant. Svårt att göra några bra trendlinjer också, de kommer inte vara jättestarka. Men jag tycker väl Adidas, vi ser att vi har en fin uptrend, vi har höga toppar, höga bottnar, ser positivt ut. Så jag tycker det ser ut som vi bara vill fortsätta på uppåt här just nu i Adidas. Men jag skulle nog vara ganska positivt inställd. Vi har en fin trend uppåt, alla moving average pekar uppåt, höga toppar, höga bottnar. Är inte vid något tydligt motstånd just nu, så jag tycker absolut det ser ut som vi vill squeeza på uppåt, eller trycka på uppåt i Adidas. Nästa motstånd som jag hade hållit lite utkik på hade varit i den här zonen här uppe. Men jag tycker absolut det ser ganska starkt ut här just nu i Adidas, att vi vill fortsätta på uppåt. Hur ser din setup ut när kör du stationär eller bärbar, och har du skärm om du har bärbar ändå? Så det är lite olika. Jag har en stationär dator och jag har en laptop. Laptopen åker ju med mig när jag reser, som sagt. Så när jag reser då har jag oftast bara min skärm, och sen så har jag en iPad. Jag har faktiskt iPad här bredvid nu också. Så jag har en iPad bredvid och kommer nog faktiskt köpa en ny MacBook snart. Jag hade en Mac länge, men jag blev lack på Mac efter de inte stödde vissa program som jag ville ha och så vidare. Så jag gick över till PC för något år sedan. Men det kommer nog gå över till Mac ganska snart igen, tänker jag. Det kommer nog bli en Macbook Pro. Också för den delen att jag kan koppla den med min iPad, så att det kan bli som två skärmar. För då kan man koppla upp en iPad med sin Mac, så man kan dra musen emellan, så att det blir som två skärmar. Och det blir väldigt, väldigt skönt om man reser att ha en iPad och Macen med sig då. Då blir man liksom två skärmar, så man kan använda sig väldigt fint. När jag är hemma eller på kontor så har jag en stor skärm som jag använder mig av. Så det kan bli lite blandat, men som sagt när jag reser så blir det iPaden bredvid oftast, och sedan min laptop. Och jag har valt att ha en 16 tum, så det är lite större variant för att just kunna jobba lite mer på det. Så det är väl den setupen som jag brukar köra. Vi ska se. 23 minuter, vi har lite tid till innan Powell drar igång. Han drar igång om 7 minuter. Så lite tid till har vi kvar. Vid kamera som jag sen då fixat tavlan. Jag såg det nu, Sebbe. Nej, du får inte se mitt tavla än. Någon gång så kommer tavlan fixas. Vi får se när det blir dags. Och för de som undrar så är det min snära tavla här bak som folk har punkterat. Den är sned. Och ja, någon gång så ska väl det fixas. Fram tills dess så fokuserar vi på aktierna. Några till hinner vi med som sagt. Ska försöka SBB. SBB borde ju ha reagerat bra idag. Inflation neråt, räntebesked, räntesänkningar närmare. Och det ser vi också. Vi ser en positiv reaktion. Kom den vid 14.30 idag? Eller kom den senare? Vi ska se. Ja, men den kom vid 14.30. Rakt uppåt i SBB. Så har vi så positiv reaktion på räntebeskedet i SBB. Och där, eller på inflationssiffrorna, att de var lägre än väntat. Så SBB, ja, men vi har en ganska fin trend på gång just nu. Vi går uppåt, vi trendar uppåt. Högre toppar, högre bottnar. Så overall tekniskt sett så ser det väl mer positivt ut än negativt. Men vi har ju haft det lite svårt att bryta uppåt. Skulle jag bara ta bort allting likt, eller jag vill ha mina moving average. Om vi bara skulle kolla på det så här, så ser vi ändå att när vi bryter ner det lite, så vi har rört oss i sidled ganska länge nu. Från ungefär maj 2023 har vi rört oss någonting i den här stilen här. Så vi är i en konsolideringsfas. Och det är ofta så här vi rör oss i börserna. Vi har stora uppgångar, sen går vi neråt, sen kommer konsolideringsfaser eller up, och sen påbörjas en ny uptrend eller en downtrend beroende på hur då bolaget går. Och vi ser här just nu, vi har gått i sidor länge här nu, men för första gången sen vi började konsolideringen så är vi faktiskt uppe ovanför alla moving average, vilket betyder att momentum är uppåt just nu. Så det är absolut någonting som talar för SEB, tycker jag. Svårt att finna en jättebra channel här. Hyfsat, inte den bästa, men det funkar. Men som sagt, en stor konsolidering här. Vi har gått i sidled i nästan 1 år här nu. En ganska stor konsolidering dock, från botten till toppen. Så har vi haft strax över 100%. Så en stor sidledsrange där det absolut funnits möjligheter för trading. Men här nu, vi är på väg mot toppen igen. Och att utmana de här topparna, men det ser bäst ut på 1 år. På grund av att vi är ovanför alla moving average. Vi har momentum uppåt. Så det ska bli intressant att se SBB här nu. Kan räntan börja sänkas och liknande. Så blir det absolut intressant att hålla koll på. Vi har fortfarande toppen här då på den här konsolideringen. Men skulle den här börja brytas 6,6, då kan vi absolut börja se större återhämtningar i SBB. Så det är väl lite så mina tankar skulle gå om SBB just nu. Stor konsolidering, börjar se lite positivare ut. Skulle vi kunna bryta över här 6,6, då kan det absolut vara dags för att påbörja en ny större uptrend och börja återhämta sig allt mer. Mot till exempel den här 10-nivån skulle det kanske bli första nivån ifall vi bryter uppåt. Så ja, men intressant ändå att ha lite utkik på i SBB, tycker jag. Jag äger själv ingenting i SBB, för att vara ärlig. Men börjar vi bryta över här, då kan jag absolut tänka mig börja kolla lite på köpa. Vi får se vad som händer. AMD är den sista jag hinner med här nu. Vi ska se om jag hinner med AMD. Vi ska se. Jag gillade köpläge här nere vid 145. Vi studsar lite uppåt här nu. Lite 50-50 här. Jag tror ändå AMD smyger lite. Jag tror den kan vara ganska intressant att hålla koll på. Det är ju det är väl en konkurrenten till Nvidia när det kommer till chip och liknande. Lite intressant är väl den här formationen som jag skulle haft lite utkik på just nu. Bryter vi på nedsidan, ja, då ser det bearish ut. Då ska vi nog ner och testa de här lowsen här nere igen vid 145. Kan vi bryta här på uppsidan, då ser det väldigt, väldigt positivt ut på att vi ska squeeza på uppåt mot de här 188-190 nivåerna. Så det är väl lite så här som jag skulle ha koll på EMD, uppåt och neråt för lite moves. Nu ska jag bara se om Powell har dragit igång. Ibland är han sen, ibland är han tidig. Vi får se här nu.
It's dependent. This is what it's all about. The market's just reflecting the incoming data.
Correct.
From data point to data point.
Correct.
This is by design a feature and not a bug.
So when is that a problem, right? We even heard James Bullard saying this is potentially a problem if you have this degree of volatility in the benchmark rate for the entire world, as we saw.
There's going to be a lot of questions, but the number one question we all have in the last 30 minutes is, did you factor in the inflation report that came out at 8:30 Eastern time into the forecast you just unveiled 30 minutes ago? I don't think there is another question to ask in this press conference once it starts.
And Michael Gapin put it really well. If the answer is no, we did not, well, it's not that hawkish.
Okay. Det har inte tagit igång än, så vi hinner med någon till. Powell ska vi dra på här alldeles strax, så vi hinner på någon till. Jag sa att det var någon mer som har skrivit Bitfarms för det som var next på listan. Bitfarms, sist vi pratade om den, ser det ut som att vi pratade om att det fanns ett utbrott upp här mot den här nivån här. Reagerar lite där, motstånd neråt. Tuff nivå här vid 2,5. Där har vi tuff nivå vid 2,5. Kan den brytas? Kan den nu trycka på ganska bra uppåt. Ser ganska fritt uppåt här. Första nivån här vid 2,75. Följt av här uppe vid 2,9. Så det är väl de här nivåerna som jag skulle haft lite koll på. Men trendar fint uppåt för tillfället. Här bröt vi trenden på riktigt. Bryter på starkt uppåt därifrån. Mosen vid 2,5, bryts den ganska fritt med 2,75. Skulle den också tas över så har vi nästa nivå här vid 2,95 som blir lite extra intressant. Och nu är Powell igång, så nu kör vi.
Interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong as the second half of 2023. Growth of consumer spending has slowed from last year's robust pace, but remains solid. And investment in equipment and intangibles has picked up from its anemic pace last year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2.0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting, based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Just wondering if you could walk me through the committee's average inflation forecast. Core PCE is now forecast to be 2.8% by the year end. It's already 2.75, and after today's number, there were several forecasts on the street that it would be 2.6 at the end of this month. Does that tell you that the average official expects no further progress in inflation, and in fact that it's going to get worse? And if you have this wrong, doesn't it mean that you could have wrong the outlook for rates there?
Yeah, so what's going on there is that we had very low readings in the second half of last year, June through December, really. And we're now lapping those. So as you go through the 12-month window, a very low reading drops out and a new reading comes in. The new reading gets added to the 12-month window. So it's just a slight element of conservatism that we're assuming a certain level of incoming monthly PCE and core PCE numbers. We're assuming, good but not great numbers. And if you put that on top of where we are now, you get a very slight increase in the 12-month reading. Now, do we have high confidence that that's right? No, it's just a kind of conservative way for forecasting things. If we were to get more readings like today's reading, then of course that wouldn't be the case. So it's just a forecasting device. I think. Let me say that we welcome today's reading and hope for more like that.
But if it comes in, just to follow up, it comes in the way you forecast it, it would seem strange for you to be cutting rates at all in context of a rising core PCE. Thank you.
Yeah, no, I mean, I think what we said is that we don't think it'll be appropriate to reduce rates and begin to loosen policy until we have more confidence that inflation is moving back down to 2% on a sustainable basis. And that's the test we've applied. I don't know that this rules that in or out. I mean, really, it's a forecast, a fairly conservative forecast, month by month, that would lead to slightly higher 12 months rates by the end of the year. If we get, better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Nick Tamarosa of the Wall Street Journal. Chair Powell, if I look at the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances or the differences there. Would 2 or 3 more inflation readings, like the one that we saw this morning, make a September interest rate cut possible?
So as far as the SEP part of that is concerned, as you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summary of economic projections and the their dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases they're thinking, I can't really distinguish between two of these. They're so close for me. These are very close calls. But we ask them to write down the most likely one, so they do. And I think as you've said, there's 15 of the 19 are kind of clustered around 1 or 2. So I think I would look at all of them as plausible. But I'd look at I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it, that is on the committee, a really strong commitment to a particular rate path. It's actually just their forecast, and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not trying to send a strong signal that this is what I think is the right thing. It's just what they think at a given moment in time, subject to data. In terms of future meetings, we haven't, we don't we don't make decisions about future meetings until we get there. I think in terms of what we need to see, I mentioned it earlier, we want to gain further confidence. Certainly more good inflation readings will help with that. I'm not going to be specific about how many because, really it's going to be not just the inflation readings, it's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening with the forecast, what's happening with growth. You look at all of that and you ask, are we confident? Have we reached an appropriate level of confidence that inflation is moving down sustainably to 2%? Or alternatively, do we see really unexpected signs of weakness in the labor market that would call for a response? Which is another thing that could happen. But again, we don't see that. And we see today's report as progress and as building confidence, but we don't see ourselves as having the confidence that would warrant beginning to loosen policy at this time.
And if I could quickly follow up, did you or any of your colleagues change your interest rate projections after 8:30 or whenever you got the inflation numbers today?
So this happens too often, but it does happen. It just is, data came, I think it happened a few meetings ago. So when that happens, when there's an important data print during the meeting, first day or second day, what we do is we make sure people remember that they have the ability to update. We tell them how to do that. And some people do, some people don't, most people don't. And I'm not going to get into the specifics, but you have the ability to do that so that what's in the SEP actually does reflect the data that we got today to the extent you can, reflect it in one day. I think you will see PPI tomorrow. We'll know more about the PCE reading as the month goes on, but the initial CPI reading and its, kind of first level translation to PCE we did have this morning. We were briefed about it, and people were able to consider whether they should make changes. And as I said, some people generally do, but most people generally don't.
John Allen.
Hi. Bloomberg. As you noted, the labor market is now in many ways back to where it was before the pandemic. I wondered if you could comment on how officials are viewing that. So do you think that there still needs to be more cooling in the labor market to bring inflation all the way down to 2%? Or is there any sense that maybe the labor market is more vulnerable now to higher rates now that many of those imbalances have eased?
Sure. So by so many measures, the labor market was kind of overheated 2 years ago, and we've seen it gradually move back into much better balance between supply and demand. So what have we seen? We've seen labor force supply come up quite a bit through immigration and through recovering participation. That's ongoing mostly now through the immigration channel, but still we've had some increases in prime age labor force. In terms of on the demand side, we've seen quits moving down. We've seen job openings moving down. We've seen wage increases moving from very, very high levels a couple of years ago back down to more sustainable levels. We have seen unemployment creep up now 0.6 over the course of a year or so, very, very gradually. So you put all that together, what you have is still low unemployment, still 4% unemployment, historically low. But it's moved up a little bit. It's softened a bit, and that's an important statistic. But more than that, you've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still they're strong. So that's what we see. We watch the labor market, of course, and the economy as a whole, but the labor market very carefully, and that's what we see. We see gradual cooling, gradual moving toward better balance. We're monitoring it carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different tales. There's been some divergence, especially we saw in the last report that we got on Friday. So how do you interpret that, and how does it change your view on the labor market? So
sometimes you can't reconcile the differences. You just have to look at it and try to understand, and that's why it always makes sense to look at a series, in 3, 6, and 12 months of things rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains. The overall picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come way down, are still, greater than the number of unemployed people. The jobs workers gap is still a significantly positive number, greater than it was before the pandemic. So overall, we're looking at what is still a very strong labor market, but not the superheated labor market of 2 years ago, or even 1 year ago.
Thanks, Chair Powell. Neil Irwin with Axios. Back on the rates path, the SEP showed a quite large shift of rate cut expectations relative to March. That's a period in which the economic data flow hasn't been that dramatic a shift. Can you provide some color on what changed in attitudes on the committee over the last 3 months to see a much shallower path of rate cuts this year?
Yeah, the big thing that changed was the inflation forecast. So the inflation forecast moved up several tenths for the end of the year, and as I mentioned earlier in the, what did we take away from this? We had really good inflation data in the second half of last year, then kind of a pause in progress in the first quarter, and what we took away from that was that it's probably going to take longer to get the confidence that we need to begin to loosen policy. So the sense of that is that rate cuts that might have taken place this year take place next year. There are fewer rate cuts in the median this year, but there's one more next year. So if you look at year-end 2025 and 26, you're almost exactly where you would have been. Just it's moved later because of that progress. Now you get different data today. So we'll have to see where the data light the way. The economy has repeatedly surprised forecasters in both directions, and today was certainly a better inflation report than almost anybody expected. And we'll just have to see what the incoming data flow brings and how that affects the outlook and the balance of risks.
Gina. Gina Smiley, New York Times. Thanks for taking our questions. In the summary of economic projections, the long-run interest rate forecast moved up a bit. I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. How should we interpret what that means about how the committee views its current policy setting?
So two things about that. One is this. You're right, it did move up, but I want to remember to point out that long-run neutral rate of interest is a long-run concept. It really is a theoretical concept, can't be directly observed, and what it is the interest rate that would hold the economy at equilibrium, maximum employment, and price stability, potentially years in the future where there are no shocks. So it's a little bit, it's not something we observe today. Today we've got a very specific economy with all kinds of shocks we're still getting over from the pandemic. So it's, I don't think that the concept of R-star, it's a very important concept in economics and what we do, but honestly it doesn't really get you where you need to be to think about what appropriate policy is in the near term. But back to your original question, people have been gradually writing it up because I just think people are coming to the view that rates are less likely to go down to their pre-pandemic levels, which were very low by recent history measures. Now we can't really know that. That's an interesting dispute and discussion to have now. But ultimately, we think that things like the neutral rate are driven by longer-run, slow-moving forces, and there's a really good question about whether those really have changed or whether instead rates and the economy are experiencing a series of persistent but ultimately temporary shocks. That's been the debate. And we can't know. But in the meantime, we're making policy with the economy that we have, with the distortions that we have. And I also, to your other point, I think it is the case that as time has gone by, the question of how restrictive is policy has become one that everyone's asking, and we're asking it too. And my answer has been that policy is restrictive. The question of whether it's sufficiently restrictive is going to be one we know over time. But I think for the reasons I talked about at the last press conference and other places, I think the evidence is pretty clear that policy is restrictive and is having the effects that we would hope for.
Well, thanks, Chair Powell. Howard Schneider with Reuters. Just to carry that a little further, should we read this as a conclusion, the combination of tipping to one cut this year and acknowledging further progress on inflation as kind of a mark to market on the level of restrictiveness that you need, that you in fact have concluded that you weren't quite there yet?
I'd be reluctant to try to draw that conclusion. I think this is about, looking at the incoming data and asking how much progress are we making on inflation and how is the rest of the economy doing? Is the labor market still strong? That's what we're thinking about. You can translate it into the language you're talking about, but to me the focus is more on we have a goal which is price stability, another goal which is maximum employment. How are we doing there? We think we've got a good, strong labor market still. We think we've been making progress toward the price stability goal, and then for a while there was a pause, and we look at today's thing and we think, well, that's a good reading, and we hope we get more like that. And in the meantime, we're asking, is our policy stance about right? And we think yes, it's about right. We're prepared to adjust it as appropriate, but we think we're getting the things that we would want to get, broadly speaking. And that's why we've been at this policy right now for almost a year.
So just to follow up on that, I think one curious thing here is you've got now this restrictive policy in place and virtually no change in any of the major things for all of this year. You've got growth that stays above long-run potential throughout the forecast period, unemployment that never goes above the long-run estimate, right, of 4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly, a lot of some of what we've been getting is just the reversal of the unwinding of the pandemic-related distortions to both supply and demand, and that is complemented by and amplified, supported by restrictive monetary policy. So those two things have been working together. We've also had a very positive supply shock on the labor side, and also you get a positive supply shock when the supply conditions unwind and return to normal. So you've had, above trend potential growth and high growth, and yet you've had the benefit of inflation coming down, really fast actually last year, and we'll see what the rest of this year brings. So these dynamics can continue as long as they continue. Ultimately, the question is are you down to demand? And we don't know that though. Look at today's report. If we see more like that, we can't know what the future holds. But in the meantime, we've made pretty good progress on inflation with our current stance.
Michael McKee from Bloomberg Radio and Television. The base case of the committee seems to be that there is going to be at least one rate cut this year, but your growth forecast doesn't see any slowdown in the rest of the year, nor does the unemployment forecast see any significant weakening of the labor market. And your inflation forecasts basically average out to no change. So if at the end of the year there is no change from conditions now, why would you anticipate cutting rates? What would be the point for a rate cut?
Well, we think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that since we raised rates this far, we've always been pointing to cuts at a certain point, not to eliminate the possibility of hikes, but no one has that as their base case. So no one on the committee does. So that's how we think about it, and that's what we've been getting. That's what we've been getting is good progress on inflation, with growth at a good level, and with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that, but so far they haven't had to, and that's why we're watching so carefully for signs of weakness. We don't really see that. We kind of see what we wanted to see, which was gradual cooling in demand, gradual rebalancing in the labor market, while we're continuing to make progress on inflation. So we're getting good results here.
Well, to follow up, is there any kind of concern for the housing industry or financial stability, banks, in leaving rates where they are for too long at this point?
On housing, the housing situation is a complicated one, and you can see that's a place where rates are really having a significant effect. I mean, ultimately, the best thing we can do for the housing market is to bring inflation down so that we can bring rates down so that the housing market can continue to normalize. There will still be a national housing shortage, as there was before the pandemic. There will still be one, but the distortions that we see now with lock-ins and things like that, low mortgages. In terms of banks, the banking system has been, solid, strong, well-capitalized, lending. We've seen good performance by the banks. We had the turmoil early last year, but banks have been focusing on bringing up their liquidity, bringing up their capital, and having risk management plans in place. So the banking system, seems to be in good shape.
Chris.
Thanks, Chris Rugaber at Associated Press. I was wondering if we can. On inflation, if you can tell us a little more about where you see inflationary pressure in the economy. You mentioned labor markets coming into better balance, and inflation expectations appear to be well anchored. You're seeing, anecdotal stories of the large chains like Walmart and Target are announcing price cuts. McDonald's announcing a $5 meal deal. So, people may still be unhappy about prices at the grocery store, but it doesn't seem like there's a lot of inflationary pressure left in this economy. I wonder if you could tell us more about it.
I think it's true that inflationary pressures have come down, but we're still getting high inflation readings. So, and I think you can see it in various places. In some parts of non-housing services, you see elevated inflation still, and that's probably it could be to do with wages. Goods prices have kind of fluctuated. There's been a surprising increase in import prices on goods, which is kind of hard to understand, and we've taken some signal from that. But and of course, housing services, you're continuing to see high readings there. To some extent, that's catch-up inflation from earlier pressures. But I mean, overall, you're right. Inflationary pressures have come down. As I mentioned, the labor market has come into better balance. Wages are still running, I would say, above a sustainable path, which would be that of trend inflation and trend productivity. You're still seeing wage increases moving above that. We haven't thought of wages as being the principal, cause of inflation, but at the same time, getting back to 2% inflation is likely to require return to a more sustainable level, which is somewhat below the current level of increases in the aggregate.
Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. There's obviously a lot of focus on how many cuts could be expected this year, but can you give us a sense of what one cut by the end of the year would actually do to the economy, what you think would be a meaningful difference if there was a cut by the end of the year, or even two?
I think if you look back in 5 or 10 years and try to pull out the significance to the U.S. economy of one 25 basis point rate cut, you'd have quite a job on your hands. So that's not how we look at it. Really the whole rate path matters, and I do continue to think that when we do start to loosen policy, that will show up in a significant loosening in financial market conditions. And the market will price in what it prices in. I have no way of saying, we're not at that stage, so I don't know what we'll be thinking about at that time. But it's a consequential decision for the economy, and you want to get it right. And fortunately, we have a strong economy, and we have the ability to approach this question carefully. And we will approach it carefully while we're very much keeping an eye on downside economic risks should they emerge.
And you've been talking about this clear sense that it's just going to take longer to have the confidence that's needed for rate cuts. Is there something about what happened in the first couple of months of the year that you're seeing differently now with more time or hindsight? Do you still characterize it as expected bumpiness or something more lasting that is affecting your policy for the rest of the year?
We you always want to avoid the tendency to dismiss the parts of inflation that we don't like and just make it go away. But we had a quarter where inflation was running higher, and yes, I could stand here and say it's stuff we shouldn't have taken signal from, but it is what it is. You have to, low inflation is low inflation, high inflation. So if you have a quarter where it's higher, we tried not to take signal from the first couple of months, but we got a third month, and we said, okay, the signal we're taking is that, you know, we think it's going to take longer to get confidence that inflation is moving sustainably down 2%. That's what we said. I think that was the right thing to do. I still think that's the right thing to do. Now we have today's inflation reading, which is very different, very much more positive. We're going to have to see what the trend is, what's going to be the data going forward. We're looking for something that gives us confidence that inflation is moving sustainably down to 2%. And readings like today's, you know, that's a step in the right direction. But you know, one reading isn't. It's only one reading. You don't want to be too motivated by any single data point.
Jolene. Hi, Chair Powell. Thank you for taking our questions. I'm Jolene Kent with CBS News. What's your message to Americans who are seeing encouraging economic data but don't feel good about this economy?
I don't think anyone knows, has a definitive answer why people are not as happy about the economy as they might be. And we don't tell people how they should think or feel about the economy. That's not our job. People experience what they experience. All I can tell you is what the data show, which is we've got an economy that's growing at a solid pace. We've got a very strong labor market with unemployment at 4%. It's been a long time since we've had a long stretch of time with unemployment at or below 4%, very long time. We had a period of high inflation. Inflation has come down really significantly, and we're doing everything we can to bring that inflationary episode fully to a halt and fully restore price stability. We're confident that we'll get there. And in the meantime, it's going to be painful for people, but the ultimate pain would be a period of long period of high inflation. It is people who, lower income people who are at the margins of the economy who have the worst experience, who experience the most pain from inflation. So, it's for those people, for all Americans, but particularly for those people that we're doing everything we can to bring inflation back down under control.
As just a quick follow-up here, you've indicated one interest rate cut sometime this year, and I know you don't have a crystal ball up there, but a lot of people are watching and see, borrowing money remains very expensive. For everybody who's out there waiting on a rate cut, about when can consumers expect some relief?
Well, I don't have a precise date for you, but what we said is that we want to make sure that we're confident that inflation is actually moving back down to 2%. And when we are, then we can look at loosening policy. So having that kind of confidence that inflation will be at 2%, it just pays benefits to the whole economy, to all Americans for a long period of time. We had that period for a very long time. We very much want to get back to a place where people can not think about inflation. It's just not a concern in the everyday economic decisions that they make. We were there for a long time, and our goal is to get back to that place. And we've made good progress, and we're in the phase now of just sticking with it until we get it done.
Claire.
Claire Jones, Financial Times. Just drawing on the change in the statement on there being modest further progress on inflation. Halfway, through the year and after today's CPI release, what have you and other committee members found that has been particularly encouraging to you? And just in terms of the conservatism, how much of that is about stickiness in shelter inflation in particular? Thank you.
So encouraging has been that growth, the growth clearly that we had last year, and particularly the second half of last year, and we continue to see still strong growth, or solid growth this year. That's been very encouraging. If you go back a year, there was a real concern about, very much slowing growth and a recession. Many forecasters had that. And that's not what happened. Instead, the U.S. is, anyway, and it's in sharp distinction with many other advanced economies around the world. So that's been encouraging. I would say that today's inflation report is encouraging, but it comes after, several your reports that were not so encouraging. You ask about, your second question was really about shelter inflation. So I think if you go back a couple of years, we know that there are renters, and then there are people who own their houses, and we have OER, which is owner's equivalent rent. And so when market-based rents go up sharply as they did at the beginning of when the economy reopened. They really went up sharply. Those play into rollover rents much more slowly for existing tenants than they do for new tenants. And so we found now that there are big lags. So there's sort of a bulge of high past increases in market rents that has to get worked off, and that may take several years. Nonetheless, as long as market rents are going up at relatively low levels, and they still are, this is just going to happen. It just is going to happen more slowly than we thought. We also do sort of this thing where we impute a rental value to owned homes, and that's many countries around the world do that. Some do it differently than us. It's something that the price experts have regularly looked at. It is not something that we're the only country that does, and it's not something we're looking at changing or would look at changing, anytime soon. But it's true. It's one of the very hardest things in inflation and in prices is how to think about, the services that someone is getting by living in a home that they could rent, but they're actually living in it. And some countries choose to just ignore that, but that's not how we do inflation here. We do it the way we do it, and we've been very transparent about it. And it's true that we're seeing delays in realizing what's happening economically, but we understand that. We understand that very well.
Edward. Edward Lawrence with Fox Business. Thank you for taking the question, Chair Powell. So I want to go back to jobs and the consumer. The last jobs report showed that over the past year, 634,000 more people took multiple jobs. That's up 8.2%. And since January of 2021, we've seen prices rise 19%. So people are using their credit cards to pay for their lifestyle. What pressure points will signal to you that the slowing economy could maybe break companies in terms of hiring or break the consumer in terms of spending?
So, we monitor all the things you mentioned and more. What we're seeing is basically spending was going up faster than disposable income during big parts of last year rather. And so what you'd expect to see is people spending more on their credit cards. That has been happening. Credit card balances have been going up. Credit card defaults have been going up. They're not at high levels. Remember that after the pandemic, people were cooped up. They couldn't spend money. They couldn't go out to spend money. They could spend money from home. But households were in very, very strong, historically strong financial shape. They've now worked off a lot of that. So we're watching that carefully. And, what do we see? That's what we see. We see the same data that everybody else sees, but you've still got household sector that's in pretty good shape. But nonetheless, it's not in the kind of shape it was in a year or two ago. And we're carefully watching that.
So how close then are we to that point where the consumer can't continue to spend as it's spending, or companies can't hire like they're hiring?
Consumer spending is still growing. It's not growing at the pace it was growing at a year or so ago, but it's still growing solidly. And by the way, other parts of the economy are picking up. Spending on equipment and intangibles has picked up quite a bit in the wake of all the construction that we saw of new tech plants. So overall, the economy is exhibiting solid growth, and something around 2%, which is a good pace of growth for the U.S. economy. But you're right though. We do see the same thing other people see, which is increasing financial pressures on more lower income people, and the best thing we can do is to foster a very strong jobs economy, which we think we have done. Ultimately, to get inflation under control, because those people experience inflation, very directly, very painfully, and once we get inflation under control, rates can come down, which will also improve things.
Victoria.
Hi, Victoria Guida with Politico. You've mentioned that an unexpected weakening in the labor market would bring rate cuts sooner, and I was just wondering, can you talk a little bit about what that would look like? Is it more of like a quicker pace of people losing jobs? Is it more the level of the unemployment rate if it were to start to go above 4.2 or something like that? How are you thinking about what you're looking for to see the job market unexpectedly weaken?
you know, when I say unexpectedly, the first thing is more than kind of is in our forecast or in common forecasts. So something more than that. But we'll be looking at everything. You know, the labor market, you know, has the ability, has the tendency sometimes to move to weaken quickly. So waiting for that to happen is not what we're doing. You know, we're watching very carefully. We're looking at the balance of risks. I always point out the balance of risks. So, and also the fact that we look at all of the whole situation. So, you know, a decision to begin to, you know, to loosen policy could have several reasons associated with it at a given time. But I would just, you know, we monitor all the labor market data, and if we saw troubling weakening more than expected, then that would be something we'd consider responding to. But we look at the broader context of what's going on too.
So something like negative payroll numbers would be.
I'm not going to. I mean, I can think of things that many things would make it on that list, but I don't think I'll utter them here.
Thank you, Chair Powell. Simon Urbanovich with The Economist. May I ask, you mentioned with the slightly higher PC readings earlier this year that it wasn't 1 or 2 months, but 3 months that tipped you to be a bit more cautious in the rate outlook. Should we take from that, you know, it looks like May will be quite good for PC as it was for CPI. Does that imply that kind of 2 more good months would reinstill the confidence that rate cuts could be coming sooner than you currently project?
You know, I don't actually have that kind of mechanical thing in my thinking. I get that, you know, as many good ones as we had bad ones, but no, it's not like that. It's the whole, it's going to be the totality of the data. The labor market data, the growth data, in terms of inflation, you know, you'd want to see real progress that builds your confidence that we are on a path down to 2%. And I don't want to try to give you specific numbers of things because that points to dates, and I just don't think we're not at a point of being able to do that.
Thank you for doing this. I'm Kosuke Takami with Nikkei. I would like to know about the impact of stronger dollar on U.S. economic growth and prices. And I have no doubt that the markets should determine the exchange rate, but Japan and some emerging markets are suffering from the strong dollar. So I want to know if it is having a positive impact on U.S. economy in total. Thank you.
So we don't, actually it's our finance ministry, the Treasury Department, that has a responsibility for thinking about and if it sees fit, doing things about the level of the dollar. So for us, it's just another financial variable. And you're right, the dollar has been, has exhibited some strength over the course of the last year or so because the U.S. economy is very strong. We don't think of it as benefiting or hurting the U.S. We don't manage the level of the dollar. That's not our job. It's not, you know, and for our economy, what we're trying to foster is maximum employment and price stability, and we feel like we've made good progress on both of those goals over the course of the past year.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you would cut rates before inflation falls to 2%. You're forecasting inflation to end the year at 2.8% on core PCE, or at 2.8%, of course, on core PCE. Right now, you said the inflation forecast is conservative and that if you got 2.6 to 2.7 on PCE, that would be a good place to be. You also indicated the job market has mostly normalized. So why not cut rates this summer just once, you're well above neutral, to try to preserve the soft landing rather than risking waiting too long in the quest for confidence for inflation?
You know, so we're well aware of the two-sided risks here. Let me just say, we understand that if we wait too long, that could come at the cost of economic activity, of employment, of the expansion. We understand that if we move too quickly, we could end up undoing a lot of the good that we've done and have to then start over, and it could be very disruptive. So we're extremely aware of both of those risks and just basically trying to manage them. And what we said is that we don't think it'll be appropriate to begin to loosen policy until we're more confident that inflation is moving down to 2% over time on a sustainable basis. That's kind of been our test. Or there's another test, which is, you know, an unexpected deterioration in labor market conditions. So I think that's the right way for us to think about it. That's our dual mandate there. And, you know, we have a strong economy. We've got growth. All forecasts are very commonly around 2%. That's a strong growth rate for our economy. The labor market continues to print jobs at a pretty high rate. Unemployment's still low, so we have the ability now to approach this question carefully, and that's what we're doing.
Just to follow Chair Powell, do you need to be ahead of a weakening in the labor market? Otherwise, is it too late, given that the labor market is a lagging indicator, right, when you look at the monthly jobs data?
Yeah, we completely understand that that's the risk, and that's not our plan, is to wait for things to break and then try to fix them. We're trying to balance these two goals in a way that is consistent with our framework, and we think we're doing that.
Evan.
Thank you, Chair Powell. Evan Reiser with Market News International. You have mentioned before the framework review process will start in the latter half of the year. At this point, do you have any specific time frame for the start of that? Who will lead it? Will it be you or a committee group of your peers? What will be the parameters? Do you anticipate the review will consider changes to communications going forward?
So what we've been thinking is that we would announce and commence the review later or late in the year. In the meantime, as that time approaches, we will be devoting a lot of careful thought and planning to the contours of it. Within scope would certainly be communications generally. I'm not going to say that we'll look at this or that particular thing. And all the other details, we don't want to get prematurely into a conversation until it's really time to have it. And so, I'm going to leave pretty much everything else to later in the year.
Go to Nancy for the last question.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Just one more question on housing. Can you still cut rates with shelter prices high, or will you wait until they start to moderate a bit?
I wouldn't. There isn't any one variable like housing prices moderating that would really decide against what we're doing. We've got an overall test, which is greater confidence that inflation is moving down to 2% on a sustainable basis. That's our overall test. Or alternatively, we see unexpected weakening in the labor market. So those are two different tests. I would say, we're not looking at any one price in any one sector and saying that's the one. We don't target housing prices, for example. And we don't target wages. We target aggregate prices and overall employment. So,
but if housing prices remain sticky, could that slow down the pace of rate cuts?
I think you'd look at we'd be looking at the aggregate numbers, and asking ourselves what's going on here with inflation at the aggregate level. And of course, if any price that contributed to ongoing inflation would matter. Any price that contributed to ongoing disinflation would matter too. But I wouldn't single out housing as having a special role there. Thank you very much.
The chairman of the Federal Reserve, Jerome Powell, wrapping up the June Fed decision. No change at the Federal Reserve to interest rates. Plenty of changes in the forecast. Inflation moving up a little bit. The dot plot moving down a little bit. Equity markets just about holding on to gains and still near all-time highs on the S&P 500. On the Nasdaq, we're still higher by 1.8%. The Russell up by 2.2. If you turn the page and switch to the board and get to the bond market, this is where things start to get interesting. Yields were down by double digits at the front end throughout most of the morning and into the afternoon. We're now down by only 9 on a 2-year at 474.55. And if you take an intraday chart of the 2-year yield, this shows the story of the morning and the afternoon perfectly. I want to show you 3 moves. The first move was 8:30 Eastern time this morning when CPI came out cooler than expected. What you see on yields? Drop. Easy to see. On the far right side of the chart, two moves I want to point out. One's at 2 p.m. Another is in the news conference. At 2 p.m, we had some forecasts. The dot plot came out, and we all wanted to know where the median dot would be. In March, it signalled, or at least implied, 3 cuts for 2024. That came down to 1. Yields started to climb. And then we all had a big question going into the news conference. Well, hang on a minute. Did they factor in the inflation report that came out this morning? And obviously, inevitably, Chairman Powell was asked about it. This is what he had to say.
What's in the SEP actually does reflect the data that we got today, to the extent you can, reflect it in one day. I think we'll see PPI tomorrow. We'll know more about the PCE reading as the month goes on. But the initial CPI reading and its, kind of first level translation to PCE, we did have this morning. We were briefed about it, and people were able to consider whether they should make changes.
And it didn't look like many people made any changes, Lisa. And for that reason, that's why you see that spike higher, that little move higher, again on a 2-year yield. Cue the confusion around the forecasts.
Well, is this by design in some levels? Basically, there were a number of Fed officials who got that CPI print and opted not to change their inflation forecast. Did they do so because they want more than 3 inflation reads to really gain confidence in some sort of disinflationary trend? Is it because, all things being equal, it's better to send a hawkish signal to markets that are eagerly looking for any opening to buy into any idea of a rate cut? All we know is that was a slight disappointment that's being reflected in slightly higher yields that have taken back about 5 basis points from earlier this morning.
There's always going to be a big conversation about where the median dot is. But when these numbers came out, you were the first to point this out. The split amongst the policymakers elsewhere. TK, just to go through this again, for those of you just joining us, this is what we saw. Get away from the median. On the committee right now, the dot plot shows 4 policymakers who saw no cuts this year. Some anticipated just 1 reduction, that was 7, and 8 expected, Tom, 2 cuts. The Federal Reserve is kind of all over the place.
Yeah, they're bifurcated. And what's important here is the dispersion is not smooth. It's like basically 2 camps. I thought Lukawa, of all people, had a wonderful tweet out on this, really pointing out the polarity that we see in the Fed as we stagger.
Okej. Nej, men intressant. Mycket som hände med Fed. Vi ser här nu att vi säljer av lite grann just nu, men fortfarande ganska starkt uppe ändå. Vi får se hur vi avslutar. Takeawayen som de punkterade här på Bloomberg, som faktiskt var lite intressant, det var att de Fed-medlemmar som då, vad de sätter sin dotplot, vad de tror att räntan ska vara på i slutet av året, ändrades inte utifrån dagens reading. Så de var inte riktigt nöjda med att det här var okej, nu är det dags att börja sänka, utan de känner att de var lite med trygghet. Och då pratar de om då räntan i USA, till exempel 30-åriga räntan i USA. Och det var ju då att här vid 14.30, vi föll väldigt hårt, men när räntebeskedet sedan kom ut här vid 8-tiden och det såg ut då att Fed inte har ändrat någonting med att de ska börja sänka räntan. Något annorlunda i år på grund av dagens lägre inflation, så har då räntan börjat gå upp lite igen ändå. Så ganska intressant faktiskt. Men overall annars en ganska neutral Powell. Han säger att det här är ett steg i rätt riktning. Vi är på rätt väg, inflationen går neråt, vår plan fungerar, men det är fortfarande för tidigt för att säga att det är dags att börja sänka räntorna. Han frågade om specifika dagar, om det kommer vara i år och så vidare. Man dansade runt varenda fråga, så ingenting direkt där om vi kommer få ett räntesänkning i år eller inte. Detta såg alltså inte ut att påverka Fed så mycket än så länge, utan de vill ha flera månader i rad där det går neråt. Så de är väldigt, väldigt noga med att inte sänka räntan för tidigt. Och det var väl det vi fick från Fed idag som var ganska intressant ändå. Att det går i rätt riktning, men de är inte redo att ändra någonting än. De vill säga att räntan fortsätter mer neråt. Men där tänkte vi avrunda dagens video. Tack för alla som tunade in. Som vanligt, uppskattar det väldigt mycket. Är ni inte med i Discorden så kan ni gå med i den, så kan vi fortsätta diskutera lite aktier och mer där. Så ni får det så bra så länge, så hörs vi. Tack för idag. Det här var Robin Omega och jag säger ciao.